Hello and welcome to The Pitch. I'm Sarah Allen and today I'm joined by Eric Fine. Eric's the Portfolio Manager for VanEck's Emerging Markets Bonds Funds. Eric, welcome.
Thank you, Sarah.
So to begin with, what led you to work in emerging markets fixed income?
You could argue it was how I was raised. I was born in France, grew up in Switzerland and Thailand. My dad was a spy during World War II and then was MacArthur's economist when the US occupied Japan for 8 years. My mother was a career diplomat, and that was the global milieu in which I was raised. My dad was also a PhD economist. And so by the time I moved to the US, I was about 14 years old, that was my world. I didn't know the US, I was American, but I came as an outsider. And it was very natural for me to look at the world, including my own country, with distant eyes, with arguably some objectivity, and I think that was really the start. And what I really enjoyed doing was analyzing countries. How do they work? What does it mean? And in emerging market bonds, you can make a living doing that.
And what have been some of your key career highlights to date?
The first thing I'd say is they weren't obviously highlights when I was going through them, right? So in retrospect, they might look like that. But number one, in the early 90s, I worked for the US in Russia, and I designed and built their first clearing system, so securities clearing system. 33 cities, 13 time zones I think we did in about 3 years. Servers, communications modems. We found a fiber optic cable system. We actually got it from the KGB. Now this was a time when the US, you could argue, owned Russia, right? We were very involved, and it was this weird moment where the US and Russia were very aligned. And the policies we were implementing were mass privatization. So Soviet Union, all property was state-owned. The US and the Russian government at the time agreed, and they issued 150 million vouchers to the citizens. So every citizen, a baby at 6 months old, got a certificate, and you could turn it in and get shares in Gazprom or Lukoil. The issue with that is, how do you do it? And so that's why we built the system, and so that was definitely a career highlight. Now, my friends definitely did not think that was cool. Being in Russia in the early 90s was not. I really loved it, but that's one definite highlight. The fun, I guess, punctuation point on it is that system was the system onto which the SWIFT payment system, its messaging software basically, was put. And so when the SWIFT payment system was being leveraged in Russia, my first thought was, I wonder what that system, where do they put that system on? And it dawned on me there was our system. It's the only one. It's still being used. It's been used for all sorts of things because it was physical infrastructure. So that was one. Although I want to emphasize, it did not seem cool at the time. So that's number one. The second one is also related to Russia. Also, not necessarily an obvious highlight, but I'll put it this way. The generous way of describing, so after Russia, working for the US and Russia, technically I worked for Harvard. I worked for Morgan Stanley for 14 years. And I was the economist for EMEA, Russia, South Africa, those sorts of countries. The generous way of describing me is I became the world's leading economist on Russia. The accurate way of describing me was I was the world's only economist on Russia. So, and what was fascinating about that is if you become an expert on one place, you learn how to become an expert on a place. And you just need to do that again and again. And the neat thing about big important countries is they correlate with all sorts of really important things. Oil prices. How can you have a view on oil prices without really understanding Russia or other countries which are also part of my world? So that was the second highlight. But again, didn't seem cool at the time, right? The cool kids were doing Germany, right? The big rich countries. I had no interest in those, but that would be a second highlight. And the third highlight is in my current role. I'd been doing, I ended up running research at Morgan Stanley, EM, economics and bond strategy. Then I ran the prop trading desk, and I, felt like I knew EM. And I started becoming a portfolio manager on the buy side. And I had an investment process, and my teammates were my third biggest career highlight. I thought my process was awesome. They made it awesomer. They took huge ownership, and it was a real validation. First, that they got it enough to care to make it better, and they made it so much better. So those are the three highlights.
How have you seen emerging markets fixed income market evolve over time?
Better and better and better. Nothing but good news basically from the late 90s. In the 80s and 90s, EMs were a lot like Australia, and in the 70s. Most of the debt was in dollars, US dollars. And this became a problem because when your currency weakens, your ability to repay dollar debt worsens and you're in a vicious cycle. And what Australia did, and what many EM countries, Chile being the most obvious, copied was incentivize, maybe force domestic savings so you don't get into that setup. Have your debt in your own currency. What's the problem? You're much, much safer in that. That was the basic result of all the crises, whether it's the Mexico tequila crisis or the Asia crisis 97, the Russia crisis 98, they all figured that out. They all created domestic savings. It was incredibly painful. It involved fiscal austerity, truly independent central banks, and it worked. And for 20 years, EM hasn't generated crises. Its image is a crisis generator, but it just hasn't happened for 20 years. The perception is still there. The returns definitely confirm it. But I'd say that's the biggest development. If I were going to capture it in a, let's say, bumper sticker, it would be EM is the new DM, and worse, DM is the new EM. That's where the risks are. The risks are in DM.
What are the key opportunities and risks that you're monitoring in emerging markets fixed income at the moment?
The key opportunity in the EM space in general is that they have low debt that pays you more in a world worried about too much debt that doesn't pay you enough. So that's number one. Number two, it tells you that EM is where the opportunities are, and where we see the greatest opportunities first is in EM in general. That's where the alpha is, but in particular, commodities exporters. Commodities exporters are on the winning side of what you could argue is the new geopolitical configuration. The new geopolitical configuration, if you're in the US or Europe, will be, oh, the world is deglobalizing, but if you're outside that world, the world is globalizing. I'll give you a big fact that should be obvious to any investor that is completely ignored. At what price do China and India buy oil? I don't know, but I know it's below the $83 I saw this morning on the screen. 50, 55, 60. This is a permanent positive terms of trade shock to China, to India, to basically most of the world. Russia's pipes of gas and oil are moving that way, and the opposite characterizes the DM, right? And now, the last point is there are countries that are going to replace Russia as a big commodities supplier to Europe. Some of them are we have to have small diversified positions because it's largely in sub-Saharan Africa. But copper, oil, a lot of countries are stepping up. And then there are the big majors, mostly in Latin America. Brazil, Colombia, oil exporters. Brazil exports pretty much everything from iron ore to soybeans to oil to rights to oil. But those are the big general opportunities that we're focused on. But the context being the EMs have all this alpha space, but the DMs have a lot of problems for which you're not getting paid for. And that's where almost everyone has their risk. In violation of my favorite Mark Twain quote, which is, it ain't what you don't know that's going to get you, it's what you know for sure that's wrong, that ain't so.
Fantastic. Thank you so much for sharing your insights today with us, Eric.
Thank you, Sarah.
If you've enjoyed this interview, please subscribe to Livewire Markets. Thank you for watching.